Hello and welcome to Market Open Direct Connect, where companies and investors get right to the point of the news that matters, what it means and how it impacts your investment. I'm your host, Stuart Walters, and we're joined here today by four guests: John Hugh, Executive Chairman and Founder; Mitch Ellis, Executive Technical Director; Dr. Eric Lilford, Nominee CEO; and James Pearce, Corporate Lawyer and Board Member of ECOSSAUS Limited. ECOSSAUS aims to lead Australia in green hydrogen production and storage and is committed to driving positive change in the energy sector. They are aiming to build a sustainable future through green hydrogen production and the creation of salt caverns for eco-storage of on-demand renewable energy. There'll be a short presentation by James at the start, followed by a Q&A. So if you do have any questions for our panellists, you can submit them via the Q&A tab at the bottom of your screen. It's now time to introduce our guests. Gents, welcome to Direct Connect. Just quickly, before we get into the Q&A, can you give us an overview of ECOSSAUS, please?
Yeah, for sure. Good morning, everyone. So like Stuart said, ECOSSAUS is aiming to lead Australia in green hydrogen production and storage. And we want to do that by using established technology and bringing that home to the Australian market. Now, the company was founded by John and Mitch, who are with us today, and they are production and exploration specialists. Now, John and Mitch have put together a team of finance and technical and corporate professionals, which includes highly regarded minerals and energy economist, Dr. Eric Lilford, and Bob Little, who is an elder of the Oranti tribe and Australia's most experienced Indigenous land consultant. Now, John, Mitch, and Eric are all with us today, and you can see us at the screens, and they'll be assisting with the Q&A. Now, ECOSSAUS plans to harness the power of green hydrogen using salt caverns, which provides scalable, sustainable, and cost-effective storage and production opportunities. Now, we have over 10,000 square kilometres of secured tenements in three key project areas, which is in Northern Territory, Queensland, and South Australia. And we've picked these projects because they're in known salt provenance, including planned renewable energy projects and hydrogen hubs. Now, ECOSSAUS has ambitions to build Australia's first salt caverns, and we want to do that for hydrogen production and storage. And we want to deploy our unique business model, which provides potentially multiple revenue streams from early on in project development through the sale of salt and green hydrogen. Now, Australia's new hydrogen economy is gaining some serious momentum. It's been backed recently by over $8 billion in funding in the latest federal budget. And the critical issue no one's talking about is storage. So we think the timing's right to capitalise on proven and trusted technology overseas and bring that home into a rapidly growing market. Last thing I should mention is ECOSSAUS recently opened a investor expression of interest with crowdsourced fundraising group Birchall. Super encouraging sign so far. That's open right now. I'll tell you a little bit more later on, but let's get stuck into the Q&A first.
Thanks, James. Why are there no salt caverns already in Australia?
It's a good question. For the benefit of the first-time listeners today, salt caverns are, in a nutshell, very large underground cavities in salt structures, and they're formed by dissolving the salt and filling the spaces with gases and liquids. Now, salt caverns have been used for decades in North America and Europe, as they are a stable and secure storage option with a really small surface footprint. Now, no one's been using salt caverns here in Australia simply because there hasn't been a need. But with the clean energy transition, and in particular, the gaining momentum in the new hydrogen economy, the race for storage is on, and we think salt caverns are clearly the best option.
John, one for you as the founder. Where did this idea come from?
Well, I'll just correct you on one thing there, Stu. The company was co-founded by myself and Mitch Ellis, our technical director. We met as consultants on a rather large and ambitious hydrogen project in Central Australia several years ago. Storage options were one of the things that were being considered. And we knew through our own work and knowledge that salt cavern storage has been used on a large scale overseas in North America and Europe, in fact, since the mid-70s. Soon after we came to that realisation that the new hydrogen economy was coming to Australia, we decided to peg ground that was close to necessary infrastructure and obviously industry, and over areas that we knew where there was a lot of salt structures, salt layers and so forth that we could utilise to make salt caverns. Soon after that, the CSIRO woke up to themselves and announced that salt caverns for large underground hydrogen storage were the most viable option in Australia. So they also announced soon after that that the requirement for salt cavern storage in Australia, or rather just for large-scale hydrogen storage, would be 5 million tonnes per annum, or total capacity of 5 million tonnes. Now that is a very large addressable market. That's equating to about 800 to 900 salt caverns of 5,000 to 6,000 tonne class, which we believe we can construct. Now, at independently assessed storage rates of 3.5 cents per kilo per day, that represents a potential upside of over $60 billion Australian. So that's the market we're after. But as well as that, we also intend selling salt. We also intend selling hydrogen as well.
How do you know you could build salt caverns here?
Well, the geology of salt layers, sediments and salt structures such as dome structures, which are sometimes referred to as salt diapirs, is remarkably similar the world over. I mean, you can take another rock, a granite, for example, is pretty much the same everywhere in the world. A salt dome is pretty much the same everywhere in the world. And we know we've got these structures in our ground. They're not all identical, but given the vast volume of salt that we have been independently assessed as possessing in our tenements, we think there's very little risk that we won't be able to construct many, many salt caverns.
Mitch, welcome. How big are salt caverns and how safe is salt cavern storage?
Okay, so salt cavern, solution one salt caverns vary in size. The caverns that we're considering now are around about 7 million kilos or 7,000 tonne capacity. The idea that we have is a cyclic storage, so we put the hydrogen in and take it out. They equate to around about enough hydrogen energy in a cavern to basically store for 60,000 households in a year, or 30,000 EVs, covering 140,000 kilometres per year. In dimensions, the Hornsdale storage in South Australia is the largest battery storage facility here, and one salt cavern is 1,200 times bigger than the Hornsdale battery storage in capacity. As far as safety is concerned, these caverns, because they're in situ leached or solution mined at depth, so I think up to 400 metres, from 400 metres down to 2,000 metres, or preferably with hydrogen even deeper, 800 metres down, and they're demonstrated in other parts of the world. So there's at least, on a hydrogen side, there's at least 4 operating hydrogen storage facilities in the world that have been going since 1972 without incident. And they're considerably larger than the alternatives, which are surface pressure vessels, and a lot safer. The surface vessels are a lot smaller, and these are safe, suitable for cycling, and very stable.
James, does the latest federal budget help you out?
Yeah, it does, Stuart. We're pretty excited about it. So the latest federal budget to us shows a really strong commitment by the Australian government to supporting the new hydrogen economy here in Australia. There was over $8 billion in incentives, which was a big chunk of it was as a production incentive for producers of renewable hydrogen. And there's also a couple of $1 billion there to support new renewable hydrogen projects. We think that support is going to help gain momentum in the new hydrogen economy, and that's going to help incentivize new hydrogen projects and really help new project development. It's interesting as well, the Federal Treasury this week also announced the issue of the first green bond. It was a $7 billion bond, and that really enabled investors to back public projects in Australia, which are supporting our transition to net zero by 2050. The bond was super heavily oversubscribed. And really, we think that shows that there is gaining both federal support and investor support in renewable energy projects here in Australia.
What would you say are the company's key strengths?
Yeah, so I think I mentioned at the start, we've got over 10,000 square kilometres of secured acreage in our 3 key project areas, and that sits over independently assessed salt. So we know the salt's there and it's at the right depths to make a salt cavern. Now, because we started looking early, or because John and Mitch started looking early, they were able to effectively secure the best ground to build the first salt cavern project here in Australia. It's over big salt structures. It's really close to the right industry. And in South Australia, it's right next to Port Pirie and planned hydrogen hubs. We've also got a really experienced management team to help drive us on our journey. We've got a really complementary set of skills across technical, corporate, finance, and managerial. And now we have increasing federal and state government support in promoting the new hydrogen economy here. So it comes back to the question, no one's talking about storage to support this new hydrogen economy. And we think the timing is perfect to bring known and trusted technology from the States and from Europe and bring that back home in a growing market here in Australia.
Is there a salt cavern storage market in Australia?
Not yet, but we see it coming and we think it's going to be really big. You only have to look at the huge hydrogen storage projects being built around the world to see that it's coming. There's a Magnum Mitsubishi-led project in Utah, which is a 300 gigawatt hour storage capacity project. It's huge. And as I mentioned, or as John mentioned earlier, the CSIRO has already caught on to the fact that to support the new hydrogen economy here in Australia, we're going to need at least 5 million tonnes of storage capacity here, which is not just one cavern, that's lots of caverns. So we think the timing is right to bring that technology back to Australia, and we think the market is coming in a big way.
And you mentioned virtual a little bit earlier, but what is crowdsource funding and why did ECOSSAUS choose to raise capital this way?
Yeah, sure. So crowdsource fundraising is an increasingly popular way of raising capital through an online platform. The platform we're looking at using is virtual. And what that effectively does is it opens up seed or early stage investment opportunities to ordinary Australians, to a broader group of people. Usually to have access to those investments, you have to be sophisticated or professional investors and you have to have really good finance networks. But what we saw is with the increasing tailwinds behind the renewable energy projects here in Australia, and in particular behind the new hydrogen economy, we wanted to open this opportunity up to ordinary Australians and to a broader market of people so that they can come along on our journey, they can get involved at a really early stage and potentially be exposed to the upside that we see coming.
John, one for you here. Is 7,000 tonnes big or little? And how does that compare to the US?
In the US, we've got several facilities that are in that thousands of tonne capacity, and the same in Europe. Some of these are composed of several caverns, but the total storage capacity is in that 1,000-tonne plus class, and you won't find any single surface facility storage that's much over a few tonnes at the absolute maximum. And we're talking thousands of tonnes.
Where will you sell the salt you make from creating the caverns?
Basically, we think that Japan, Southeast Asia and China are, well, we know that they are the biggest markets for salt. India's economy is growing rapidly as well. So that's going to overtake China in a few short years. Already we know that in the US, ultra-high grade vacuum pan salt, which is similar to what we'll be producing over here, sells for about $230 a tonne. You can imagine we'll be producing hundreds of thousands of tonnes of salt per annum. So that's where we're headed with the salt marketing aspect to help offset capital costs of cavern construction.
And what will you do with the hydrogen you produce?
Well, initially it'll be fairly low volume. We'll just feed that back into the plant to basically green the plant and utilise green power as much as possible to begin with. As volumes build, we'll be able to inject, we believe, up to about a 15% mixture of hydrogen into existing natural gas pipelines. That's happening all over Australia at the moment now, or at least it's planned to happen. We've got gas pipelines running through our tenements or very close to them. Ultimately, we'll be producing high volume green hydrogen. And of course, we can export that. There's a huge export market for hydrogen in Japan at the moment. They're still figuring out the best way to transport it. We can also look at converting hydrogen into green urea fertiliser, which mostly would be used in Australia because we're very short of urea fertiliser here. And ultimately, of course, we could also look at exporting urea. We could also look at selling ammonia, which in some cases can be injected directly into steel-making furnaces.
Eric, welcome, sitting patiently there. Can you explain the economics of salt cavern storage and green hydrogen production projects?
Sure. So I've looked at preliminary modelling, having built my own various models and looking at current globally available data, keeping in mind that we're still very early days in what we are setting out to achieve. And at early stage modelling or modelling of an early stage opportunity, it demonstrates potential for robust, very large scale economics in a project of this nature. As I said, whilst there's no guarantee of anything I'm saying, we are at an early stage of exploration. However, conceptually looking at multi-cavern projects of this type that has the potential to generate an indicative internal rate of return in excess of 30%. This also comes hand in hand with an operating profit of over $50 million per annum, Australian dollars per annum, within 3 years, rising to somewhere in the order of $200 million within a 6 to 8 year period. They're pretty robust figures, but what I must point out is that I'm only modelling one diapier, which has multiple caverns. We've got numerous diapiers.
And hydrogen production and solution mining needs large supplies of water and power. Where will this come from?
These are two critical components. So solution mining, that's how we're going to create the caverns. Solution mining can be successfully achieved using brackish or even saline water. And we know we've got plenty of that from underground sources in close proximity to where we plan to operate. Keep in mind that this brackish and saline water is not in demand for human or for stock or for agriculture. Once we've created the solution with a salt, or a salt solution, we feed that through the mechanical vapor recompression plant and surface. That actually produces an ultra pure fresh water source or output as one of its outputs. And that's about 85% of the water that we're pumping into the salt structure in any event to create the caverns. Some of that water can be utilized to produce green hydrogen because you have to have pure water. Now, you talked about the power and where does the power come from? We're looking at power for this production being derived from excess renewable power, which is typically daylight power. We've looked at real-time charts available from the ANEO website, showing that, as an example, for South Australia, your power prices variously fall into negative territory for some of the time between 10 in the morning and 4 in the afternoon. We're also reviewing a new salt power osmotic green power system. Sounds very complicated. Not too complicated. That's already commercialized in Denmark as a potential source of very high capacity green power to allow for a more efficient and more cost-effective 24/7 electrolyzer operation.
James, can you tell us a bit more about the project development timeline?
Yeah, look, there's quite a bit going on with a hydrogen storage and production project, and a project of that scale will take some time to develop. But the easiest way to look at it is in phases. The first phase is the salt cavern building process, which involves the extraction and production of high purity salt using the MVR process that John and Eric have spoken about. That will take about 2 years from the start of definition drilling to the first production of salt. The great thing is, as soon as salt is being produced, it can be sold into the markets that John was talking about earlier. And the beauty of that is it provides cash flow from early on in the project development, which helps with the project CapEx payback. The next phase is the cavern building process, which takes about 2 years to complete. You can't just go in and create the cavern in a couple of days. You've got to do it over a period of time. So with that in mind, we're looking at a 4 to 5 year start to finish project journey. And like I said, the beauty of the business model is there's lots of opportunity for revenue streams really early on in the project development. There's opportunities with the sale of salt, and there's also opportunities with the production and sale of green hydrogen.
How much will the salt cavern project cost, and how will you fund it? Does the company also plan to list at some stage?
Yeah, good questions. If we're talking about the whole project, a salt cavern project of the size that John and Mitch were talking about, 5,000 tonnes, with an MVR plant that's going to produce that high purity salt and with hydrogen production capability, electrolyzers and things like that, a project like that is going to cost 500 million plus to build. That's a fair ways down in the project development timeline, and we expect to fund that through a combination of debt and equity, like projects of that size usually are. We would obviously look to get support from salt and hydrogen offtake partners as part of that. But as I mentioned before, the great thing about our business model is there's the opportunities for early cash flow from early on in the project development. So you're not waiting around until year 4 or year 5 before you've got any cash flow. So the project CapEx payback is really short, and there's opportunities to provide cash flow while the project's being developed. Now, do we have plans to list? I think the better way to look at it is we see a number of exit opportunities here. We've had really encouraging conversations with cavern builders in different parts of the world who are interested in what we're doing here. And we've also had some interesting and encouraging conversations with finance networks at home. And we've looked at various exit opportunities. Listing on a stock exchange is obviously one of them, and that's one we see a lot of benefits with. But there are other opportunities with those other parties in the industry, like cavern builders in Europe and the States. We could potentially do joint ventures. We could do some kind of relationships with them. There's lots of opportunities, but certainly listing on a stock exchange is one of them.
And lastly, the last question that's come in, how's the capital raising going?
Yeah, so we're still early on in what's called an expression of interest process on the virtual platform. And what that allows us to do is effectively test the market and see what kind of interest is out there. And look, we're super encouraged by what we're seeing so far. We're a bit over a week into the journey. We've had some really strong investor interest from the virtual community and from our community as well. And that's all I can really say at the moment. If we've got another couple of weeks to see how that process unfolds. And if that all goes well, we would move into a live offer on the virtual platform. But we're also exploring other opportunities for fundraising outside. So yeah, very encouraging signs.
Guys, thank you for being available today. For more information about ECOSSAUS, you can head to the company website, ECOSSAUS.com, where you can follow the company on their social media platforms. To those who attended, thank you very much. Some great questions came in. To our panelists, thank you for answering some fantastic questions. We appreciate your time. Wish you all the best and look forward to chatting again soon.